Good afternoon, I'm Brigid Taylor and this is Currency Wars. Let's take a look at the news that's driving the currencies this week. The rand's traded in a narrow range between 11.80 and 11.98 on the back of the dollar weakening in line with the euro, and this has seen the euro rand that is traded between 13.50 and 13.10. Meanwhile, the South Africa's Competition Commission has revealed that it's investigating against 11 foreign currency traders for price fixing. In a statement released this week, the antitrust agency said that it will focus on currency trades involving the South African rand in spot, forward and future contracts. Meanwhile, the minutes of last night's Federal Open Market Committee in the US confirmed that the Fed is unlikely to raise interest rates in June. It has, however, kept its option open for raising interest rates later this year. Meanwhile, the Chinese May Purchasing Managers Index released today also provides interesting insight into the economy. This after the HSBC Manufacturing Index failed to recover as much as was anticipated. Crucially, the index does remain below the 50, signaling that the Chinese economy is in contraction with regards to manufacturing activity, and this does not bode well for the South African economic outlook. Ahead of the South African Reserve Bank's decision on interest rates today, the April CPI data provided a warning shot for the SARB after it kicked up to 4.5% from 4% in the month of March. The relief was provided by softer global oil prices, and this has been dissipating, while the looming electricity traffic negotiations are another risk for inflation in the second half of 2015. We also need to bear in mind that the impact of the local drought on food prices and the public sector wage negotiations, which have settled above inflation, remain a forward-looking risk. Lastly, the weaker than expected South African retail sales growth in March confirms the slowing growth outlook and pressures that are placed on the consumers. Today I'm joined by Andre Eerenstein from RMB and Andre Cilliers from Treasury One. Welcome. So we've got quite a big week. Let's first focus on just where the rand's trading. I mean, it's been relatively range bound, thank goodness. It hasn't traded too much weaker despite all the local pressures. But we have seen quite a lot of news out of the Eurozone. So if we look at Draghi's comments about continuing liquidity, continuing quantitative easing, as well as the German economy slowing down, and we look at the manufacturing number particularly in an economy that's supposed to be driving that Eurozone. Maybe you can start us off in terms of that, as well as the Grexit, which is another issue that is plaguing the European economy.
Well, I think the Greek issue is going to remain an issue, and it's probably until the middle of June when the next big repayment is due. But I think the Eurozone will make sure that nothing is really going to destabilize the boat. That's how they've dealt with crises before, and I suspect that that's how they're going to do it this time.
Okay, and the German exports, are you not concerned in terms of that being the growth engine?
No, sure, but I think you're also coming to a slower time of the year now. You're coming into the European summer season, so it's probably not totally unexpected or seasonal. The fact that the euro is actually also strengthened off its lows probably also points to that to a certain extent. So yeah, I think Eurozone, if you look back over the last 3-4 months, has surprised to the upside in terms of economic data, whether it be growth. We'll probably go into the summer season now where it might actually disappoint.
Okay, and be a bit benign. So let's look at the currency moves. Those have been the interesting ones. I mean, that volatility that we've seen, particularly in the euro rand. Maybe you can just talk us through what's actually transpired over the last 2 weeks, because that's probably been the most active cross currency that we've traded.
Well, I think if you look at the cross currencies, then always two pairs there, and there's the dollar rand and the euro dollar. And the dollar rand's actually behaved quite nicely and quite stable. So it was really the euro dollar that blew out, and we had seen it going to 114 from the lows of the 108s and 109s. And as Andre had mentioned, positive news out of Europe, but not all that positive. I think the main emphasis there was the negative news out of the Americas and the postponement of any changes in interest rates there, and that gave that relief to the euro, moving up to the much higher levels.
But it is back again. I mean, we're back down at that 111 level. So it shows you how volatile those sentiments are around the Eurozone. You know, if you mention that, I mean, yes, you're right, that dollar coming on the back foot, we saw that starting to emanate after the last time that we chatted. But then we saw that 114 on the euro, which obviously saw the cross rate trading 13.50 and above. However, consequent to that, we've seen that move back down to a 111.
Yes, but you see, it's what I said. It's the negative news out of the US, some positive news out of Europe, but they still have the Brexit, and none of their figures really was that dramatically upwardly in motion. So the problems in Europe still existed. So temporary relief up to the 114, and now back down to 110. And do not be surprised to see it going back down to 108, because the problems is definitely far from over in Europe either.
Well, so the volatility remains in the cross-currency, Andre.
No, obviously, and I think when we look at the Fed minutes, postponing the interest rate hikes into the second half of this year, and if the data remains as is, it's probably only going to be in the first half next year. That is going to put the dollar on the back foot, and you're going to have the euro trading up to probably 116, 117 if that's the case. So volatility is here, and it will remain so because the central banks are data dependent.
They are indeed, and as you say, I mean, there's a two sides to this. So you've got the rand dollar that's in its own right will create some form of volatility on the back of the fact that we've got it's effectively US dominance. So in terms of what is the Fed going to do, what is their interest rate view, la-di-la, that impacts the dollar rand, but it also impacts our euro. So when you're looking at the crosses, you get that double whammy, which creates so much more volatility when you're looking at that cross rate. So it's interesting to see that you think that we're going to see continued strength, but let's maybe also look at those Fed minutes, because those were interesting, and I think that's been the key driver of the markets this year. What is the Fed going to do and when? We know what they want to do. But the data, unfortunately, whether we blame it on the weather, whether we're going to talk about summer, I think they're a little bit more cautious than that optimism that we saw at the beginning of the year.
I think there are two things to point out when you're looking at the Fed. There's one is core inflation, and that's actually tending to tickle higher. And that was pointed out in the Feds.
That's good, because we need that.
Yeah, sure. The other point that they're trying to make is that the fact that even though non-farm payrolls have not been great, you've had wage inflation. So you've had some signs of wages going higher.
Which is great.
Which is what the Fed is looking for. And that puts the US recovery on a lot more stable footing. Once you start seeing wages go up, the multiplier effects associated with that are big.
And that's from the consumer spending that helps to inflate. It just helps to create a more robust economy.
No, absolutely correct. And I think when the Fed starts seeing that, it will give them a lot more comfort in terms of raising rates. Because the last thing I want to do is start raising rates, and then the economy starts to shrink, and then they have to drop rates or do some form of easing. And that doesn't bode well for the credibility of a central bank like
we don't want to throw the patient out onto the street and make him go and run the 100-meter when he's not ready, right? So I think that's kind of maybe the situation that they're sitting in. So if we look at what the Fed are doing and we look at the job creation, we're starting to see this growth in wages, we're starting to see opportunities with regards to the different sectors in the US. And we look at the South African economy. Now we're in a situation where the inflation issues that plague the South African economy are not the same as the US. So in the US, inflation comes from the fact that people are earning more money and they're able to spend more money, and that drives the inflationary uptick. Whereas in South Africa, there's a lot of cost push pressures that almost do the opposite to that to the consumer. So you've got electricity wages, you've got food prices, you've got potential for, we're looking at the e-tolls. We're having this big hoopla in Joburg about the e-tolls having to be charged, or you're not getting your license renewed. These are all cost push pressures on the consumer. Do you see this impacting our growth curve going forward, Andre? And what do you think that that's going to do in terms of the bigger picture for South Africa?
I think it's certainly going to have an impact on our growth. You look at what can happen with electricity, another 13% increase. You look at your television screens and you see people at MTN requesting a 10% and a 16% bonus.
And government's just
given 7%, way above inflation. They've agreed to wage increases for the next 2 years, once again above inflation. So things don't bode well for us, and if we don't see real good growth out of international markets so that we can spin off from that growth, then we have a problem. And there we're seeing that in China, more and more the contraction in the economy and the lower growth, which does definitely not help us at all. So yes, I think we are in for a bit of a rough ride in terms of growth in our economy.
I think the other thing to point out is when you look at wage growth in the US, it's associated with the increase in productivity, whereas that's not something we really associate with wage increases in South Africa. And when you have productivity increases with wages, that actually has a very benign impact on inflation. where we have an issue is when you have wages that increase, productivity doesn't increase or in fact decreases. And that's a pure injection into inflation.
Yeah, and that's the negative side of inflation, which is unfortunately what I think the South African Reserve Bank is being faced with. And we'll see the results after the Monetary Policy Committee today. So now that we know where we stand, and we are going to pull out the big guns and have a look at the levels for the week ahead. Right, guys, so let's have a look at where we think we are going. Let's talk about the crosses particularly, because I think that's where we're seeing the big moves, is particularly if we look at what's happening on the dollar rand. I'm going to start with Andre. Andre.
Let's start with the British pound, and I think the positiveness from the election is going to dissipate a little bit, and I think that we're going to trade in a range of 1835 to 1865. Euro rand, I would call a level of 1310 up to 1340, quite volatile. And dollar rand, I will call in a level of between 1175 and 1195.
Okay, that's quite aggressive. And you, Andre?
Yeah, I'm going to be slightly more bullish on the rand. I think the MPC will be fairly hawkish today, and I think that's going to support dollar rand lower. I think we'll break 76. So I think the bottom range is going to be probably around 65.
Okay.
And I think we won't trade above 85, 90. In terms of euro rand, I think 13 is a big level, so I'm saying 13 to 13.15. And sterling rand, I also think is going to be marginally lower.
Marginally lower. So looking for strength across the board. So in conclusion, the trading strategy for the week ahead is on the export side, take advantage. If you see the rand closer to those 11.90, 11.95 levels, Andre from RMB is looking for potentially breaking down below that 11.75 and trading a lot stronger if the MPC today in fact does look a lot more hawkish. And then look for that volatility in the euro. The euro itself against the rand is going to offer you between sort of 13 and 13.50. The pound a little bit more stable after the election results. But if there's any questions or comments that you'd like to make, you're welcome to do so at CNBC #CurrencyWars410, or you can contact myself at Brigid R. Taylor for your personal responses to the FX markets. Until next week, good luck in the trenches.